Good morning students, welcome to Excel Civil Services Academy. My name is Dhanunjaya and today we are continuing our discussion on the budget that we had started. So what we have discussed is budget and the basics of budget which are important from the prelims perspective. So this is entirely a prelims perspective discussion for 2022, right? So budget, in our last session we have discussed what is the meaning of budget, where it is mentioned and what are the recent changes that they have made in the budget. So now we will be discussing the next component of budget, that is what is the classification of budget, which is again very important theme for your prelims, right? Classification of budget. We will be discussing in this short video about this classification of budget. Now first thing, budget as such, it is called as annual financial statement in your article 112 of Indian Constitution. That is what we discussed in our earlier class. Now annual financial statement has two components, that is the receipts on one side, on the other side you have expenses. This is what the budget is. On the receipt side you have two types of receipts, that is the revenue receipts and you have the capital receipts. On the expenses side you have two expenses, that is the revenue expenses and the capital expenses. Now again, revenue expenses are classified into two types, that is called tax revenues and non-tax revenues. And on the capital side you have borrowings made by the government of India, you have the foreign investments, and then you have one more thing, that is called disinvestment money. Now as far as taxes is considered, taxes are classified into direct taxes and indirect taxes. As far as non-taxes are considered, non-tax revenues for the government will be from the services that it provides, such as maybe the railways or the Yojana book that you are studying or Kurukshetra that you are studying. So whatever government gets in the form of services, that is considered as non-investment, non-tax. You have interest paid from the previous loans that government of India has given, and then you have transfers from other government or from people who are living abroad. So transfers includes gifts, remittances made, or it also includes the grants, right? This is one classification which is important from prelims. And then in the borrowings you can go for internal borrowings or you can also go for external borrowings. In the investments you have two types, that is called foreign direct investment and the second one is foreign institutional investment. Disinvestment, every year government comes and says, okay, this is the plan for disinvestment this year. On the expenses side you have two things, that is the revenue expenses and the capital expenses. Revenue expenses includes the salaries that government of India is going to pay or the interest for the loans that it has taken or the grants that it gives to other countries or to states of India or other countries. The grants extended by the central government includes the revenue. As far as capital component is considered, capital expenditure is that expenditure which is kept in the creation of some assets creation, or you can go for repaying the previous debts. Now this is the basic classification of the budget or annual financial statement. Now what are the important components? I hope many students know this, how classification of our annual financial statement is done. Now what are the things that are important for our prelims? Let's focus on that component because this is entirely a prelims discussion. What they might ask? They might give something among this and they can ask you which component is it. For example, they might give you internal borrowings forms, whether it is a revenue receipt or a capital receipt. They might ask services extended by Government of India, whether it forms a revenue part of the receipts or a capital part of the receipt. They might ask the salaries that is paid by the Government of India, whether that is revenue expenditure or a capital expenditure. So we should know this classification as such, or you have to remember this classification because there is direct chance of asking a question from this. Now going into this further, you have taxes or direct taxes. You have to know what is a direct tax, what is an indirect tax. Direct tax is a tax where the incident of the tax and the impact of the tax will be same. Impact and incidence will be on the same person. For example, your income tax that the people will pay, that will be on the people itself, and the impact will also be felt by the citizens itself. Corporate tax is another direct tax that you have. Securities transaction tax is another direct tax that you have, right? Indirect taxes are the taxes in which the incidence is on one person, incidence is on one person and impact is on other person. Impact is on other person. So this is the classification, or this is the thing that they asked previously. They asked this question: what is a direct tax and what is an indirect tax? You have to know. What are the examples of indirect tax? GST is an example of your indirect tax. Customs tax is an example of your indirect tax. You have excise tax, which is an example of your indirect tax. So these are the taxes that you find in classification. So this is the classification that you have to know. Furthermore, you have to know what is the meaning of revenue, what is the meaning of capital receipts, what is the meaning of revenue expenditure, what is the meaning of capital expenditure. Now, in order to understand what is the meaning of revenue receipts, you have to remember the definition also, so that you can pick up the choices very easily if you don't remember this classification. Now let me tell you what is this revenue receipt, definition of revenue receipt for a while, and then we will discuss the definition of capital receipts. The definition of revenue receipt is the receipts or the revenue which neither creates a liability to the government, nor reduces the asset of the government, of India. If your revenue is neither creating the liability, it is not reducing the asset of the government, then that is called revenue receipt. For example, taxes forms your revenue part. Why? Tax, no need to pay back by the government. The moment you are paying tax, that is government money, so it is not creating liability for the government, as well as it is not reducing you any of the asset. Tax, it is not going to reduce any asset such as disinvestments. So disinvestments reduce your asset. As a result, it is going to be a capital asset. Now this is the example of revenue, or this is the definition of revenue receipts. Let's go to capital receipts. Capital receipts, it is the revenue, or it is the receipts that either reduces the liability, that either creates liability or reduces the assets. Example: borrowings from outside, Borrowings from outside. Now borrowings from outside is a liability to the government because it has to pay back in future. Similarly disinvestments, it is a liability because it has been reducing your assets. So this forms your capital asset. Similarly, let's look at what is the definition of revenue expenses. Revenue expenses are those expenses which neither creates an asset nor reduces your liability. For example, paying salaries. It is not going to reduce your previous loans that you have taken, right? So Government of India's liability is not reduced for paying salaries, neither it is going to create an asset. If you go for the last thing, that is called capital expenses, they are going to either create a capital asset or going to reduce the liability of the government. For example, repaying the previous loans is a capital asset. The reason being, it is reducing the liability of the government. So repaying the previous loans comes under your capital asset, or building or investment in infrastructure projects is a capital asset. The reason is it is creating an asset. So this is the classification, and they have focused many times on this question in the previous years. They have asked which of the following are capital receipts, which of the following are capital expenses. So this is one important area of discussion where we will be having, or they will ask, the probability of asking a prelims question is very high from this end, this classification. So this is what you have to remember. You also remember what is this in particular. Now in our next video, we are going to discuss about each and every component in detail, and then we will say some examples. Thank you for joining us. Have a good day.